All right, we are back. The Prospero.Ai stock market live stream. George is joining us from around the globe. I'll let him talk a little bit more about that. But we have great topics for today. We're going to try and hit everything quickly because George has a busy schedule, but there's still a lot to cover. So we're going to run through our topics. If you're new here, like the stream, share it with your friends. I hope you enjoy the content we're about to get to. If you're not new, let us know in the chat. We recognize some of our usual suspects, so we'll be happy to see you. But I think today we're going to start off with the CPI report that came out, and then we had a Fed meeting all on the same day. So there's a lot of macro stuff to discuss with the rates, the inflation, what's happening in the market, how it's going to affect the upcoming year with the rate path. And then we have the beasts of the market, the massive companies that are all have their own AI in their own rights. We have Apple with Apple Intelligence. We have news on Tesla. We have news on Nvidia. We're going to get into all of it. Also, a pretty insane price target for Tesla that I'm sure if anybody's in here a shareholder will be happy to hear. But we'll get into all of that. And then we didn't live stream Monday, so I want to definitely cover Roaring Kitty's live stream Friday and GameStop stock, the story that never ends. It was an interesting one if anybody tuned into that. And then to close it off today, we're going to check back in with small cap stocks and give those another look because it's been a minute and we might have got some updated, investor environment with the CPI and everything that happened today. But hello, George. We ready to jump into topic number one? And why don't you share where you're joining the stream from today?
I'm from, as they say over here, across the pond, and I'm not going to attempt a terrible British accent, as I might if I was not in front of any number of potential British people that I would rather not insult. Um, yeah, just here doing some investor meetings, pretty exciting. Love the city of London, like a lot like New York. Although I will say the one thing that it seems to have better is like they can go all of the south of France, like Spain, Greece isn't far. Like they've got like I think way better vacation places. I mean the Caribbean is nice. But there's a lot of culture in those. Like the Caribbean's nice to go and sit on the beach, but there's a lot of culture in those places beyond just like a nice place to sit on the beach. Um, but yeah, happy to be here. Happy that the markets seem to be cooperating for the bulls. But let's dive in. What's first?
Just one thing I want to say. I don't know if it's coincidental, but the Mets took a trip to London and Steve Cohen was over there. So I don't know if you're meeting with your favorite stock market participant or not, but
I mean, that's always our joke. We'll see when we hear from him. Although if we did hear from him, it might be from lawyers, not necessarily him himself. But
yeah,
who knows? Maybe he picks up the phone. Maybe pick
I thought,
like I always say Prospero's endgame is a page out of his playbook. So, I don't know I don't only point out the bad stuff, you'd say.
hmm I just thought it was funny you guys were over there at the same time. But yes, so I wanted to
He's
jump
always
into the
following me around.
yeah. The CPI we got this morning, which was positive for the market, it came in at unchanged month over month, which was a tenth below the expectation. So the market reacted positively. Then we had Jerome Powell, who just started speaking at 2:30, kind of took a little bit of a hawkish tone. I think maybe because we see him kind of play the markets, the market's at all-time high. He'll be a little hawkish. If it's low, he'll be a little dovish. But can you just talk a little about what that CPI report means for the market going forward with this whole rate path situation that keeps changing day by day, it seems like?
I mean, well, I think ever since, and we've been talking about it, obviously in the letter on Sunday, that like a big difference is, essentially what happened um, in Canada and like the pressure that that puts on the US to cut rates. Like, you know, I think it's an extension of that, right? Because we pretty much just like hit a lot of estimates. There were things like core CPI that I think, came in particularly good, especially like month over month. But at the end of the day, um, we are definitely in a spot where um where I think it's kind of just like Canada put pressure on the US. And then I think the only thing people were waiting to see was if inflation surprised too high. And then they're just like, okay, maybe we would be behind Canada. And there were already like 50-50 bets before this on like a September rate cut. Now it's like overwhelming. I think even before that, it's, favored. And so, I mean, I actually was expecting this today, and why I didn't like actually load up on my more longs before the event, because he's always been like, look at the data, look at the data, look at the data. So I don't think he's going to cut next time either, and I don't think he's really going to want to say that he's going to cut 2 times away when he basically doesn't want a bad inflation reading to blow up in his face. He's very sensitive to those things. So I do think we're probably one good inflation reading away from, or just consensus away from, like the following month being a rate cut. That would be my guess. But like, I think it's a very good sign for the market how sure it's looking that a rate cut is coming, relatively soon, because it was looking good before that, to be honest, when we didn't know exactly when they were coming. So, obviously net option sentiment, we talked about it last week, was kind of ahead of even the rate cut announcement. That's always cool to see, how valuable that signal can be. I started loading up on tech before the rate cut announcement because I was like, well, that's net option sentiment over 50, especially considering it was only like a few weeks ago that we were seeing it in, like, I dip in, I think, in the low 20s. I think I even saw it at 19. So like that quick swing especially is, I think, a very bullish sign. But I always like to say the other side, because it's such a big swing, before anyone gets too excited, I'm going to have my eye out for just like volatility in that signal. But overall, I think I'm as bullish as I get for the next few months.
So, two things before we move on from this topic. One, the Fed was very late, seemingly from the market's eyes, to begin raising rates. If we get good data and they still don't commit to lowering rates, is the market going to get nervous that they're going to be late again and be too hawkish for too long? And then also, I've read a lot about how you should sell the first rate cut, because that generally, I think historically, there's some pain that comes after that. Do you think it's more complicated than that, or do you think that's something that people should keep in mind once we get the rate cut?
I think it's a sell on the news event, like, like many. But the one caveat I will say is there is some talk of there being like a rate cut, just maybe to like satiate the demand after Canada did it, just to say like, okay, we're not behind. But then maybe another pause to see how that works, give it a little more time. So I do think that that's the big. I do think that's the big thing that people are going to be watching out for. I think it could be a news event, but I don't think people are going to be going like all in on this being just like rate cuts, for the rest of the year, because I think they're only pricing in two. So there is like there, or predicting two. So there is, to a certain extent, a lot of people, even the bulls, that don't necessarily think we're just going to go straight rate cuts. But if he says anything that makes people think that he's willing to get more aggressive, um, I don't care what anyone says. That's gonna be a bull signal, because it's not, there's some uncertainty priced in to whether we're just gonna be, cutting, 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 kind of similarly to how we raised. Um, but but yeah, that would be the caveat. But I do think that that's generally good advice. But I'd extend it not to just like, oh, if there's a rate cut and everybody's expecting a rate cut. I look at it more like, if something happens as expected, like, you're gonna have like, generally, in general terms, you're gonna have a sell off after. And I would say like the best way I look at that is like some of that is kind of about um some of that kind of is about like the extent, right? If you're, say, only pricing, like, if the market's only pricing like an 80% chance of the rate cut, and then it happens, there's room to go upwards, right? Because like there's straight math involved in that are like feeding straight into the models that are saying, oh, we were only modeling an 80% chance. So like that that 80 turning to 100 instantaneously, that's going to send stocks up, right? But if it's like 99, or like, I'd say the more sure, again, the market is about anything, the more you risk the stock going down if it just does the anything everybody's expecting.
So now I want to get into a topic of maybe something that the market wasn't expecting. By the way, the stock reacted. Apple was up, I think, over 6% yesterday, and last I looked, up over 5% today after all of their AI announcements that they had at their meeting earlier this week. Um, They talked about integrating ChatGPT into their phones, all of the AI applications that they're going to interlay in their products. Uh, are you as impressed as the market reaction to how Apple's AI product update?
I'm kind of on the complete opposite end because, like, I even remember, like, I think it was a few quarters ago when when everybody was saying AI in their conference calls, and they seemingly like made a point, not like they were above the fold on that, and they actually got hit for that. But I'm not that like you can buy plenty of companies that are going to get like direct upside from AI, like having GPT and Apple products, like to me, that could be like a profitability suck if all of a sudden they're having to pay a bunch of fees to Microsoft for people using that, right? That doesn't help their ultimate profitability, which, is my big thing. Like these other, you can have AI companies that are like in AI, but are like in AI making, profits for themselves, not like for some other company that's actually like kind of a competitor to them, which they were deciding between Google and Microsoft, so it was going to be that way anyway. But yeah, that's how I see it. Like, I don't necessarily think that it says anything good about them because if you think about like the cult of Apple too, look at some people with these AI features, but I feel like most people that buy Apple phones, it's because they've already been buying Apple phones, unless they do something like really, really cool. Like, but even then, it's just like, well, like couldn't ChatGPT just like sell whatever to like Samsung? And like, yeah, there might be some Apple products that are like, or like spins on it that's different in how they use ChatGPT. But that's what kind of like Samsung and like these other companies rip off anyway. Like whatever Apple does, they kind of just like recreate and do it cheaper. So like that's even easier to do if you're dependent on like a technology like ChatGPT. So like I think it's one of those things, and we talk about this before. They like know that they had to do something, and the market was going to react positively to this because they've been waiting for it. But like they really, I don't think this is. I think ultimately it could bite them in the ass because they're all like there's the difference between like, hey, an iPhone, they're not paying anything to anyone. They make the software, blah, blah. They're not paying anything to anyone other than the people that manufacture the phones and the raw materials, right? All of a sudden you're adding another bill collector in Microsoft there. And like that's downward margin pressure on hardware that can also have like, tougher margins than software because of those raw materials as it is. Um, so yeah, this doesn't excite me, but I'm not surprised that it excites the market. Nor are they.
So, so we had Apple regain the spot as the biggest company in the world by market cap after this stock move. It's kind of a three-horse race between Nvidia, Microsoft, and Apple. Do you see that continuing where they're all kind of seesawing back and forth, or do you think one will pull away soon? How do you see that playing out?
I think unless we see kind of like a major advance in either ChatGPT monetization or like use cases, I think it's only a matter of time before Nvidia. I mean, look at the way they're growing, right? They're just like it's a torrid pace. Like even if you're just looking at the growth rates and the math and the growth in the market cap, like and you have no idea what any of the businesses are. Like Nvidia would be the opposite choice. And if anything, I think some people like talk themselves out of it. But I think it was a big deal that Jensen Huang is now starting to talk about them as a product company, an AI product company. I think that that's huge. Um, I think that um, I think that that's something that is just like, well, sometimes when people are like, downgrading or saying Nvidia is overvalued or whatever, they're saying that um, they're saying uh, that it's just a hardware company. So I think that was very intentional, and I think they're right. They are like the way they go to market now, where they're just like solving AI problems for people, and like yeah, they're mass distributing that like AI problem solving with hardware as like a big leg of it. But that is a product, and they should be viewed as a product company.
So one more thing on this topic. So I saw someone speaking about how Apple has $100 billion share buyback, and that they were speculating that the stock move is from Apple kind of using a lot of that buyback to kind of pump the stock, so the market participants think that the AI reaction is very positive, no matter if it is or not. Do you think there's any merit to that theory?
Be like Occam's razor. Like I think they need to make a story about themselves around AI because everybody else is lapping them. So yeah, I could easily see that being the case. And they were behind. Like that is pretty interesting and smart, I would say. Should we answer this question in the chat?
Yes. So Nissan is talking about Abgo. He wants to understand what the signals look like in Prospero for Broadcom, I believe is the stock.
Yeah. I mean, we've been loving Broadcom, like, right? We've been adding it a lot. I mean, it looks really good right now. It's in a positive upward net option sentiment change, like upside breakouts heading up, downside breakouts also heading up too, which it could be, added volatility, but it's strong. 92 profitability rating and still 63 growth, 88 upside, 26 downside, and then 92 net option sentiment, 87 net social. Like I've been debating it, but I do think, and I closed one of my positions this morning, like, maybe not the smartest thing, but I do think I'm going to hold through earnings. I think that's my plan on this, just because of like the enthusiasm in the market. I think the risk reward is there that even if they disappoint a little bit, um, then then um, I think it'll still. I think the pain won't be as bad as it otherwise might have been. Hopefully that answered the question. In terms of like large caps, if you just go into long-term bulls, because profitability is one of the three optimization points there, you're going to basically see like our favorite large cap stocks in there. Um, oh wow, we got some. We're going through. So we don't have an API. We will soon have a Discord where we start to like add more data to, but we can't do that. Like one of the reasons that makes Prospero work, and we're like in year 3 where we're beating the market by a lot, is that we're not selling our data. We're not letting hedge funds have access to it. We're not trading the alpha into the market. So like we can't sell an API as much as we would love to give API access to our users. We would just have no way of stopping hedge funds from buying, our data and basically trying to, stop what we're doing before retail traders, investors can get in. And that's why we will never have an API.
So I want to stay on the topic of the Prospero signals, but I want to talk about Nvidia stock with it. I'm nervous about Nvidia stock because I have two uncles on opposite sides of my family, so they don't know each other. Both of them bought Nvidia stock this week, and they're not very. I would say they're beginners for a knowledge level in the stock market. They saw it split, they've seen it go up so much, and they bought it. But I wanted to ask you, like, how does a split affect the signals in Prospero for a stock? And we'll just use Nvidia as the example.
Yeah, I mean, not really. Like sometimes actually there's like if someone's people saw some volatility, sometimes there's a delay when the data sets are catching up with like adjusted close and like our price targets and those price targets don't get adjusted. So yeah, if there is and many maybe some of you saw some weird, volatility in the signals around those events. But uh, it's mostly come back. Net option sentiment has stayed very strong. I mean, splits are very good. And like I don't it's one of those things that like sure, Nvidia could go down, but like how bullish the market is overall, like that's not looking very likely. If the market overall is healthy, why wouldn't Nvidia ongoing be a good buy? I mean, like I say this all the time that like I'm a broken record, but like they keep posting like the last 3 quarters they posted the best quarter I've ever seen. So it's like it actually like sure you don't get like sure it's a bit of a momentum play and there's some risk because it could go the other way fast the second like there's a bad news event or like institutions just decide that they want to like take profits, whatever. There's no defense against, Nvidia maybe even losing 20% in a week just because any stock with a meteoric rise, you'll have that where like actually a lot of the future growth is what's built into the price. Um, but I think Nvidia is as good of a stock as any to own right now. And like, you've seen it, you follow our portfolio, like it's not something we really added until like because we preferred other things until we started seeing, I would say, especially more strength on the upside. Like we saw it like go in higher, like finally, and like that makes a lot of sense. It seems like there was, at least until that OpEx day, a lot more kind of like longer term um, options in there that I believe just got aged out is what happened there. Um, but yeah, I think that Nvidia. I mean, I really like Broadcom. We'll see how it like, but I think in terms of stocks that you'd want to own in the next like 2-3 months, I think it's like Nvidia, Broadcom, and SMCI. Maybe Eli Lilly, but that's not as much of like an economic catalyst just because they seem to be getting like good news on top of good news. Um, but you got to be excited about chips right now. And I think label it, I would call like Nvidia the safest like chip play with good upside. Like SMCI, I would say has the most upside, but the most risk in the chip play. And then Broadcom's just like lowest risk, lowest reward. And we've been playing that on weeks that we've been less sure, and it's worked out like this week in particular. Like, it's done better than Nvidia and and SMCI just because the market's been a little, unsure, not today, but the last 2 days, and I would think for the week on the whole.
So you didn't mention this stock and one you'd like to hold for the next 2-3 months, and we've been covering the story about Musk's compensation package, which the result will be in tomorrow. My gut tells me them moving their headquarters to Texas will pass, but his pay will fail. I saw a stat that he needs 90% of retail shareholders to vote yes for his comp package to pass, based on how they think institutions are going to vote. What does your gut tell you about those two vote outcomes that are going to be in tomorrow?
Yeah, I mean, I agree with you. I think the Texas will pass because I think people generally like, I think Elon Musk has done a terrible job of managing the story around this. And like he doesn't seem to care. I mean, but that's what happens when you don't seem to care. And I do think like this kind of like aggressive like Cal Purrs, and I think it was like Cal Stirs too, another one like came out and said they weren't voting for something. I can't recall the last time I've ever even heard Cal Purrs say anything. So I think it's kind of backlash against I think the way that he's handling it. And like, let's be real. Cal Purrs is saying something not because I think they have any personal problems with Elon Musk or whatever. I think they have a problem with the fact that he seems to be starting to lose the crowd, and like they have to either be part of it, like if he doesn't care, like I think, and we've talked about this before, but the problem with this pay package, like other than like what he actually got flagged for, which was like the board being stacked with like I think one of his best friends and his brother, right? But even then, like it's not like that doesn't happen on boards, like that happens on other boards. um I think the real issue is the perception around, okay, so you sell a bunch of Tesla shares to buy X, which, like, okay, that's your prerogative, but like you voluntarily like divested and own less Tesla, and then you're saying you want to own more of Tesla. It's like, well, it's pretty annoying to have that happen as a shareholder. Be like, okay, you're just gonna like basically take money that could go into the company on other things just because like you wanted to buy Tesla. And B, like I'd say the bigger issue, like that I'd have as a shareholder, I'm not a shareholder, is like, how do I know you're not gonna just take those shares, like buy something else that you want, and then ask to own 20% again? Like, when does that part end? So I think that like I think ultimately like the big things that you like, and we talk about this all the time, Delaware like is very business friendly. But even if you see the Delaware case with like AMC, there was like a lot of complaints. And like the one way I would say like you do get Delaware's attention is by like having people, complain about the way things are set up, like and how they feel about it. So yeah, I think that like what we're talking about there um is a very clear sign that people are pissed off about this. People were pissed off about like the way that it went down, are pissed off about it now. And I guess the question is like, why not 56 billion is like kind of getting highlighted as like the biggest pay package. Like, why not just like go a little smaller? Like that's what I don't understand about some of this. It like seems like not only does he not care what people think, it seems like he's like thumbing his power in people's noses a little bit. And like I don't really I mean Elon Musk, I've seen him pull off a lot of stuff, but generally that kind of stuff doesn't go well for you in the end.
So, Jonathan, I see your question in the chat. We will get to it next. I just want to wrap up this Tesla topic because I have a price target for 2029 from Kathy Wood. George, I think I could give you 100 guesses. I don't think you'd guess this high. Her price target is $2,600 for Tesla stock. She says 90% of the value of the enterprise will be attributed to robotaxi by that time. Uh, what do you think of that price target from Kathy Wood? Is it a little bit bold?
Yeah. I mean, but she knows tech as well as anyone. And like when I look at that, I look at it like I don't like actually my issue and the risk factor is I think Elon Musk could have a robo taxi on the road that might still have some errors, but if people were patient with like, those errors basically meaning some lost lives, I think he could have it on the road in like a year or two. Like that's not the issue. The issue is like, will he be allowed? And like that's my problem with that price target. Like because I think the tech could be there to send under that price, especially like with all of that revenue, all that FSD revenue, selling Teslas that you then get profits on, that you also then get FSD revenue from, or just cab, I guess just like cab fares. There you wouldn't be selling it. But you could even like franchise those Teslas that are doing that, and you could like it could be a different like they could get it for free. They could have be a little small business owner, and then they could just like get a cut of the fares, and like maybe manage customer service for it a little bit. But yeah, like that's my issue. Like, and that's what I don't. That's like for the foreseeable future. Why I won't go long or short Tesla. Like that's just my overall feeling where I'm just like I like I don't want like that could happen. And boy would that blow up in your face if you were shorter, but also there's like it's becoming so risky and I think the biggest sign of that is like not like the pay package we talked about, but the thing we talked about the other day where it was just like he's diverting AI chips from Tesla to X, where it's just like he clearly is willing to like flirt with like very serious damage to Tesla stock price. And it's just like no matter the upside of a company, like I can't possibly like it's why like other than for some moral reasons, there's like a practical side that I wouldn't own Robinhood. Like because it's just like, yeah, it might be a great value, but one of the reasons it's a great value is that you never know when the like headline of them taking away the buy button or some other horrible new thing that they're going to do is it. So it's like it's not worth that much risk when I can own something like Nvidia, I can own something like Meta, I can own something like Microsoft, which is feeling very safe and looking like even better in our signals lately, I think because of ChatGPT. Like I just there's no reason, and if there's one thing that we preach, it's just like you just manage risk. If you manage risk, you'll do well. And there's just like for all the upside that I think there's a fair point to make on Tesla, the risk is a lot greater. And you can see that in upside downside, right? Upside for Tesla is like 86, and downside is I think 42, which I think if you look at like Apple, like I believe Apple's got a lower upside and downside. So yeah, Apple's 85 upside, so right in that same neighborhood, and 36 downside. So even that right there, and Apple's like problems with revenue, you still see people like a little more nervous, making more bets against Tesla in the long-term options markets.
So if you can keep Prospero open, Jonathan is asking about CELH. Is it time to buy the dip or stay away?
Yeah, that upside breakout isn't. I mean, the short term signals look all right, a little volatile, but like I don't like at 46 profitability and where I've seen upside in the past. Like I don't like it at a 66 upside. I think I would have to see it at least a 75 upside and higher net option sentiment to be interested in CELH long.
Okay, so the next thing I want to talk about is a live stream that occurred, I think, last Friday, and it had a little bit more viewers than we do right now. It was Roaring Kitty. He went live. I caught it live. It was very didn't look like he had anything planned. He was kind of just goofing around. Nothing really of credence, I thought, from the live stream. But he did expose, or I think they were already available, but he showed again that his GMA positions all expired June 21st. So he's got a ticking deadline that's 9 days away now. I don't know if you caught any of the live stream or what you make of it and the whole GMC story. It's just,
I
so fun to keep track
you
of.
you combined AMC and GME. That was funny. The whole
Oh, did
GMC
I?
story.
Oh,
Yeah.
GMC.
Yeah. Yeah. So I was actually just on like the like a podcast with like Dave Lauer and some of the other people in like the urban universe. It was like we had that great thing and we talked about some of this um with him. But like yeah, the one thing that he said is like that he's watched like a lot of the Roaring Kitty live streams and he said that this one was weird. Like not like the others. So that was the first thing where it's like I didn't watch it, but I trust his word on that. But yeah, I mean, I think there's been so many unpredictable things about this. But like add to the list the fact that like the stock, went down while he was talking. Like I think people were expecting some kind of announcement so you could see it, but like, yeah, that's not a bet I would have taken. Like, oh, this is when GameStop's gonna lose momentum when Roaring Kitty's got like this huge like audience just like waiting for him. And that part is strange too, to make an audience like wait for you. Um, but other than what we've said before in like live stream a few weeks ago, the thing for me that is just like the why of this, I don't understand. And when I say the why, I just mean like one of the things that was brought up is like how do you get like $200 million in the first place? And like it's been part of it is like maybe he was making some good investments since GameStop. I think basically say he cleared like 50 million, but that's still like a 4x return to get to 200 million. And then it's just like, well, if he was making other investments, why wasn't he talking about that? Like if he was in Nvidia, why wasn't he talking about Nvidia? Like he talks about everything else. He's just going to talk about this. And then it's just like, what is the catalyst that continues to be like this whole thing has been weird because there's been no catalyst for the first move, other than him posting. But as we've shown with our data, there was big option bets being made in the long and short-term options markets like before that. So people, it wasn't just the meme. Other people were kind of banking on this rise happening before it happened in a very concerted way. So it's like, why? Like, I still don't know what the event is. The other really weird why in this is that they've now diluted like twice, and normally dilution is like the end of all of this like meme stock one, but like they've now done it twice. Um, so that's really weird. And the only other thing that I have to say about like it's just like, come on, sometimes I really would think that people would want to learn investing a little better than this. All the people that are like passing around like, oh, like they could do M&A now. And it's just like, well, first of all, the only thing that really makes sense is Steam and Valve. And Steam in 2022, it was the most recent year I could find, did 10 billion in revenue. So you're not buying that for 4 point. You need a hell of a lot more than that by that. And Valve, the parent, did 13 billion in revenue, and I'm sure it's higher now. So you're not buying that. And then like the other point is like Apple's got like 67 billion in cash sitting there, and like why would you sell your company to GameStop? They're not really in the M&A game. Apple's got like so much more money and like, they could acquire like we're just singling it out Apple because they tend to have a lot of cash. So, or even Buffett, people are saying, and that is the one idea I do actually like. I think Roaring Kitty becoming like using this to become like a Berkshire Hathaway of like meme stuff. I think that would be the smart thing. to do with the money. Spin up a little like, turn like talk to GameStop, turn it into a little bit of a hedge fund with him. Um, and and yeah, I think that that was a very, very interesting part. The other thing that's, my idea that I think they should absolutely do is they should sell merch with Roaring Kitty. They should partner on it. They should just like sell a bunch of that stuff. There's so many of the like the cult that would just like jack up their revenue, and they need like, I swear that could be bigger than their other business doing. But I mean, I think that's the big thing. Like, as a value guy, like, even for any company, even for Apple, like, I think the one company that's kind of the exception is Meta does very good acquisitions. But again, part of what they're doing and part of why you want to be acquired is even if GameStop's willing to pay like more than say Meta. Like, Meta's good at like getting these companies that like they have a lot more money and they're good at getting these companies out to wider audiences. That's one of the reasons they get sold. Because these people retain upside a lot of the time. There's some stock in the deal, so it's just like you don't necessarily want GameStop if you're acquired for 1 or 2 billion to like spend most of their little nest egg like that could be used to help you grow um, to acquire you. But I would say the only other thing there um, is that I just don't see how a company in Prospero it's like 33 growth, 14 growth, like 33 profitability. Like, I don't think a company is investable unless you have growth in your core business. And like, and you shouldn't need to acquire to do that. And they don't have it. Like, they're one of the worst growth companies. So I just think it's just like, even as a momentum play with how crazy it's been, and we actually saw net option sentiment go to, 100 before this run again. So we were out in front of it a little bit, but there's been some confusing data since then. But what I would say is if you are watching this in Prospero, net option sentiment seems to be, I think, the trade that I'm seeing is institutions being like, well, we don't know exactly what's going to happen, so we better stay bullish in the short term, at least until like we figure out this like June 21st Roaring Kitty thing. But they're hedging with long-term options because if you look at those graphs now, like I think earlier in the week, upside was like at 65 and downside was like in the low 50s or something like that. And now it's like last I checked, upside was 51 and downside was 63. So I think that's what's happening. They're hedging in the long-term options markets because that's what we've seen. That's what we pointed out, like, the first time that actually it looked like institutions to avoid the options chains like moving them too much and maybe blowing up their trade with retail because retail looks at all those like options trades, options chains. They're doing it in the longer term one, so it's harder to see what they're doing.
So the last thing I wanted to ask you today that I had as a topic is how do the small cap stocks look after we got this CPI report that shows inflation kind of dropping? It really looks like rate cuts are kind of at the doorstep. Uh, the IWM is still about 20% off its all-time high from 2021, and we just see these mega cap stocks get bigger and bigger. I feel like eventually some of that money has to be put into these small caps, but what's your opinion on that?
That I see. I mean, I think they could do like I think they could easily do better than say Nvidia over the next year. But like to me, I'm saying like in terms of the return. But the risk is just so much bigger on those small caps than there are for these mega tech companies in AI in great growth businesses. And that's the thing. For small caps, like that's what normally attracts them. You like people to them, they're like, oh, I could see this growing, 200% over the next year. Well, Nvidia is doing that like right now. So the risk reward just isn't there. It isn't there for me. I do think we will see I think we will see people doing what you're saying, like going into small caps, but not me. Like I actually did on a space recently. It was really funny. This is how barbelled, and I have to look at it last year. I haven't because I was just answering a question. But our longs this year, the average market cap is 590 billion, and our shorts it's 10 billion. So that is like really, but like that's we've been doing what makes sense, like to us, and I think that it's just like it's a good year for large cap, like because a lot of them, like even if they're not Nvidia, a lot of them are getting excitement around integrating AI or like or the idea that AI will lower their costs and raise their profitability, you know?
Yeah, that makes a lot of sense. Maybe we want to answer any questions we have left before we wrap this up. I saw Sebastian's question about GME, but I feel like you kind of talked about it when you ended that about what signals to look for in Prospero for it.
And you should post there's a good thread with our case studies. Um I'll send it to you, or I'll post it in. Anyone that's curious about it can email us. I feel like clicking the links are like, um so yeah, I mean, we were out in front. Oh, I could maybe even find it. We were out in front of it raising and then it declining. So, like, yeah, like I said, the best tip I can give you is net option sentiment. Right now, I think there's just gonna, until this roaring kitty thing gets sorted out, I think there's just gonna be tons of speculation in the short-term options markets. So you should look at the trend in upside and downside to give you an indication. And right now, upside's heading down and downside's heading up. So I think that tells you that, despite the fact that they've got to trade the options upside of this institutions, they're hedging in the long-term options markets. How does the model reflect change in sentiment?
Yeah,
I imagine you're talking about net option sentiment. Um, and that's really all that it is. At a base level, we have our own kind of advanced skew where we isolate institutional trades, first of all. And then beyond that, and like, we're trying to say like these are institutions to get their sentiment and net option sentiment. And then other than that, we have our own kind of like advanced what's called a skew, which is basically like we're comparing the like where calls above where the stock is trading are priced versus puts below where the stock is trading is priced. So that's where we talk about like bets, where people are betting because we're looking at that pricing. And like what we do, the best way to describe how it works, and like, yeah, like change in sentiment is a reflection of this pricing. I think you have a little reverse, not like that. But what I would say is like a sweep order, and like we see sweep orders, like basically it's like if an institution buys so much of one strike, one particular options contract, um, strike expiration pair, they buy so much, they're like buying the ask and sending the price up. That sends out a sweep order. But my attitude on that and our attitude at Prospero is like that's not useful because they're basically paying that premium of buying the ask to send you that message because they know they're going to follow. What we care about is more like what we call robotic signatures, what they're trying to hide from you. So we're looking at consistency, a methodical nature to prices moving up across many different short-term options, expirations, and strikes to form our, kind of differentiator.
that's a great answer there. I think we had a juicy stream today. We covered a lot in a short amount of time. I think it was filled with good information for everybody that was able to tune in live. I hope we didn't keep you from
So
your
yeah,
dinner, George.
yeah, I'll answer this too. So I think I would advise you to read the metrics in the app, and if you click on one, it'll pull up the metrics because like we actually explain all of this. But like what I would say is the signals are built to be the signals they are, and that's one of the reasons they work well. Like net options is pure option sentiment. Upside and downside, if you read them, upside doesn't have PE in it, but it does have things like analyst ratings, price targets, where they're rating them relative to price momentum factors. But profitability and growth, those are the value metrics. That's where we look at like sales forecasts and profitability forecasts, and we overlay our own economic things. So it's all pretty self-explanatory, especially if you click in. But please come back and ask more questions after you've read a little.
Yeah, good to see you in the stream today, Nissan, if that's how you say your name properly. Hope to see you back
All
here.
right,
You know,
I
we
got to
usually
get
live
out of
stream
here.
twice a week, but George is out of here. So we'll see everybody next
Yeah.
week again.
All right,
Bye.
thanks.